Steve Leisman joins us now with the headlines. Steve, what's he saying?
He's saying that we seem to be on track for a soft landing, but of course he says it's too soon to declare victory. And just when you thought there might be a bit of victory, he warns that if inflation remains high and the economy too resilient, the Fed may have to step on the brakes harder than it's been. Ultimately, I haven't heard him in the last, 33 minutes of speaking really come down on that issue of whether he believes the Fed needs to do more or not. He says he does see the higher yields out there, but he hasn't seen a rise in inflation expectations, which suggests more of a real yield or an economic growth-fueled rise in yields. Inflation, he says, is headed down. Governor Chris Waller earlier today, Scott saying in his speech that the Fed had taken forceful action to reduce inflation, end quote, "We will stay on the job to achieve our objective of 2% inflation." He did not hint also whether he thinks the Fed needed to hike again. For that, you got to go to Raphael Bostic. He did talk about this. He used the phrase again that rates are, quote, sufficiently restrictive, which tells you he thinks they've done enough, but still a long way to go in bringing inflation down. So he thinks there's still further to go in terms of keeping rates high, but not necessarily higher than they are already. I'll leave it there, Scott, except to say that as you know, the outlook for that last rate hike of the year is way down with a 14% probability for November, and it looks like just under 30%, 29% for December. So market pretty much thinks the Fed is done here.